Hello and welcome to another MyCPE News Roundup. My name is Jason Dynason, reviewing some of the top stories in the accounting world over the last week or two or so. One note, the House of Representatives has passed a tax bill and it's going to the Senate. We don't have coverage of that here because that's a changing situation day by day, sometimes hour by hour. So there's coverage of that elsewhere. But this is more just a news roundup of some other stories in the tax and accounting world. So DOGE, Department of Government Efficiency, promised 1 to 2 trillion in savings, but there's just some realities with some of these things that it's going to likely come in much less than that. And in some cases, some of the jobs that have been cut, now those people have been called back to the workforce with the federal government. But what what do we know about DOGE? 32 billion of savings. The exact reasons why are not always known. Sometimes details have been withheld for legal reasons. Various changes to contracts account for a lot of it too, and we've talked about some of that in these updates about some of the changes to contracts. But if we continue to go down here in this article about the DOGE cuts, so what can we learn about that? Trying to cut costs and be efficient and such is a smart thing to do. And things like looking at from a household budgeting standpoint, or even businesses. I find this happens in my own business sometimes, where it's like, wait, what was that $8.99 fee for? And it comes out every month. What subscription is that? Do we even use that? It's not going to be a huge savings, but you string together several of those, and that could be hundreds of dollars. And whether that's your household budget or a business budget, I mean, that's something. Some of the things, though, from a business standpoint, don't overestimate savings. That's something that I talk about with my clients, my business clients, when doing projections and such. Like, what do you think you're really going to make? I mean, there's nothing wrong with being an optimist. And sometimes there's a little bit of blue sky optimism, I suppose, in any projection, but, be realistic. Understand the system before you make dramatic moves, and don't cause more disruption than clarity. Let's move to the next article. Trump media has said that there are material weaknesses in its financial structure. And one of the things that I wanted to get to in this article was they were using a firm right here, BF Borgers, who was banned by the SEC a year ago for massive fraud. And so that was the firm that was auditing Trump Media and Technology Group. That's just a little did you know FYI kind of thing. Let's move to this story about tax credits potentially for Hollywood films. And John Voight and Sylvester Stallone have been talking to President Trump about creating benefits for the film industry or bringing back certain things for the film industry. So President Trump has talked about a 100% tariff on foreign-made movies. There are, of course, enforcement problems with that, such as how would you do that on a platform like Netflix or Amazon Prime or whatever. But now there's more going on. John Voight and Sylvester Stallone have been talking to President Trump about a few things right here. Bringing back Section 199. Now, that's not QBI. QBI is 199A. This is Section 199, which is Domestic Production Activities Deduction, the DPAD deduction. The Tax Cuts and Jobs Act took away DPAD. And so the pitch is to bring that back to benefit, film production and TV production. Section 181 allows for tax-deductible production expenses, but what John Voight and Sylvester Stallone have been talking about is doubling it to 30 million. And then Section 461 is net operating losses. TCJA generally prohibits carryback of NOLs. And so one of the proposals that's been made is to bring back the ability to carry back NOLs. There's also an idea of a 10 to 20% federal tax credit. And if that happens, and there's a film producer doing something in a state that offers a tax credit, you could have tax credits stacked together that would be quite a chunk of change. All right, with all the talk about tariffs, some businesses are considering, should we add some kind of line item that shows what the tariff cost is? And actually, 61% of Americans say that businesses should. And it's somewhat bipartisan. I mean, there's the usual split between Republicans and Democrats, but yet 42% of Republicans, which is a pretty big chunk, say yes. And so, here's an example of a potential disclosure showing what the tariff cost is on a particular item. There's, of course, problems with this. The article here lists a few. The upside is building trust, so people are like, oh, this is why the product costs what it does. Maybe you get people placing blame for increased prices on the government, not the store. And maybe this kind of transparency could be a selling point for your business. For me, I mean, there's two downsides, I think. Three are listed on the slide or on the screen. One is some buyers just won't care. That's one. But the two that I would point out immediately, I pointed it out in my own mind before really reading this article. One is, if you do this, it's going to get political. Whether you really want it to or not, or even if you don't really have political intentions when you do this, you may not be like Amazon, where Donald Trump is going to call you and tell you not to do it, or he's also said things to Walmart also, but your customers, there's going to be a certain segment of customers who may not like what you've done in showing the tariff cost. And I actually think the biggest thing is the logistical headache. You could say the tariff is a certain percentage and the proposed, increases in tariffs do this or that, but it can get really complicated. It's a complicated world, complicated supply chains. What really are your costs? And how much of your costs gone up? And, I think it could be very difficult to actually do this in the real world. Skechers is the latest company to get into private equity. They've entered into a $9.4 billion deal with private equity company 3G Capital. Skechers, they sell a variety of footwear. I own a pair of Skechers, actually, and have for a number of years. So they are, there's things going on with tariffs and the US tariffs and just other things going on internationally, and it's part of why they wanted to come together with 3G Capital. And they have a portfolio that includes investments in Burger King, Heinz, and Hunter Douglas. So that's just, we like to keep you updated on what's happening in the private equity world. If you're a college sports fan, you've heard of NIL, name, image, and likeness, which has been a big change to the college athletics landscape. I am from Iowa. I'm an Iowa Hawkeye fan. At one time, I had season tickets to Hawkeye football. I've since moved, and so I gave up my season tickets in the move. I moved too far away to keep going to games, but always been a big Iowa football fan. And I would say NIL plus the transfer portal has really changed what college football looks like and has made it hard to sometimes even know what you should think about some of the things that are happening. Transfer portal is a totally different subject, though. NIL, what we wanted to talk about here is that's income to those players. And that would mean it's taxable. But some states are taking action to exempt NIL income from taxation. And the latest, or the first state, they're the first state to do it, but many states are proposing it. Well, I don't know about many, several states are proposing it, and that is exempting NIL income from state taxes. So NIL income previous to this was taxed at up to 3.9%. So on $1 million deal, that would be 39,000 of state taxes. But now, retroactive to January 1st, NIL is tax free, and it comes with a confidentiality shield. NIL deals are exempt from the Freedom of Information Act. So, and you think about at big schools like Arkansas in the SEC, the slide says football reigns supreme, but the men's basketball team is usually pretty good too, and John Calipari is their coach now. And they compete in the SEC against no tax states like Texas, Florida, and Tennessee. And in the past, before NIL, that probably wasn't that big of a deal, at least not with trying to get athletes. It could have been with trying to get coaches, I suppose, but probably not so much with athletes. But with athletes being able to get deals now and make money, this maybe helps level the playing field a little bit from a no tax state like Texas, Florida, or Tennessee, and now your NIL income is not taxable if you're in Arkansas. So Arkansas is the first state to actually do it. Georgia was the first state to propose it. They haven't done it yet, but they were the first to propose it. Illinois, Alabama, and Louisiana are not far behind Arkansas on this. Illinois is also considering such legislation, as is North Carolina. And among the other big players out there, Texas, Florida, and Tennessee are already state income tax free. And then just to close things out, talking about authenticity and just kind of a human interest sort of thing. Tax season is over now, and you might be asking yourself, is this sustainable? Is it fulfilling? I know from my own life experiences in the accounting field and doing taxes that sometimes the answer to both of those questions has been no. I know accountants who have thrown their hands up and just walked away from all of it. Some of them had decades of experience because they just get burned out. And so now that tax season is over, if you're now this is assuming you're a tax accountant, even if you're doing something else in the accounting world, think about your busy season. How happy are you during busy season? Is it sustainable? What can you do to find work-life balance? Going through your strengths and weaknesses, looking at client service. There are accountants who advertise that, hey, I respond to your emails. How do you think your clients feel about working with you? And one of the things that's not in the article, but on my own podcast, some of the guests, and this is a topic that we talk about a lot on my podcast, which is getting through it all and surviving. And that is one of the things that comes up over and over again is asking why. What's your why? And there's not a right or wrong answer to that. It's just you need to think about that. Why are you doing this? And be like a little kid. Keep asking why until you get really down to a granular level of why. I want to make money. Why? Well, so I can do this or that. Why? Keep asking why, and eventually you'll get down to a really granular level that gives you something that can motivate you. So, there's your little psychological, pickup at the end of our news review. I'm Jason Dynason for MyCPE One. Join us again next time.